Welcome to yet another interesting episode of our regular debates, which this time is going to focus on the future of blockchain technology and cryptocurrencies in Africa. I'm your host, Julius Bismungu. Africa is brimming with knowledge driven by young people who are so eager to test their hands to create lasting solutions for the continent, which many now see as a hotbed of innovation. Innovators in frontier markets such as Nigeria, Kenya, or even Rwanda are now experimenting with blockchain, a distributed ledger technology. But what potential does the technology present for the continent's social and economic sectors? Well, to discuss this further, I'm joined by Obinna Okwani, who's the Chief Digital Officer at the Bank of Kigali, which is Rwanda's largest commercial bank. Russell Okungu, American football star. Mind you, Okungu is a Bitcoin enthusiast, an entrepreneur, and angel investor. Kayode Babalinde, who's the Executive Director of Africa Blockchain Institute, is also joining me. Well, let's start with Kayode. Blockchain has been a buzzword for quite some time now, especially among the business community and tech community. But if you were to describe what blockchain is to an ordinary person in Africa, how can you describe what blockchain is?
All right, thank you. Blockchain is a distributed ledger. When businesses are run, we record our transaction of each expenses coming in and what we're spending on the ledger. But in that case, the centralized ledger means it's only located or accessible by the authority or the owner of the ledger. But on the blockchain, it is spread across board, across servers and across nodes, meaning anybody and everybody on that network can access that ledger. And because the blockchain, what makes the blockchain is because it is secure, it is immutable, and also transactions are very fast, like the existing traditional system of making transaction or doing business. So to a layman, blockchain is actually a decentralized technology or a ledger to allow you to do transaction in a secure and a very immutable way.
Great. So let me come to you, Obinna. Do financial institutions such as banks really understand what blockchain is? Do they even care about it?
Yeah, thank you, Julius. Pleasure to be on board. I think the easy answer is no for the most part, but I think things are changing at a rapid pace. JP Morgan, Fidelity, BNY Mellon, even Citigroup just published a 110-page position paper on blockchain, which was quite positive and forward-looking. So it's been slow, but I think we're at a tipping point now where the largest banks are leading the way in the space. And I think this year, if you're a technology executive at a bank and you haven't published your blockchain strategy to the board, you might attract some nasty looks. So we have so much to learn, but we're all looking forward to figuring out exactly where we fit into this money revolution.
Great. So let me come to you, Russell. One of the popular applications of blockchain is actually Bitcoin, and yourself, you have demanded to be paid in Bitcoin, and I think recent news really indicate that you currently get half of your $13 million salary in Bitcoin. Why should anyone care about Bitcoin?
Yeah, that's a really good question. So I think a lot of buzzwords will be thrown around, like blockchain, ledgers, and a lot of jargon and all these types of things. But I think the most important thing to come across is Bitcoin. Bitcoin is a 10x, 100x better product. It's superior money, uncensorable, unseizable, unfreezable, permissionless, borderless money, right? They can handle final payments, international payments all across the world, right? And so my question to every single African, whether it's in the motherland or diaspora, is when, right? When? Ultimately, if you can hold Bitcoin, like in terms of in treasury, or it's what we're seeing here in the public markets here in the U.S., ultra high net worth individuals hold it, pensions, endowments, Goldman Sachs and Fidelity are coming up and creating services with it. It makes complete sense. And it's just a matter of time between when central banks decide that they're going to hold it onto their balance sheet, right? Because ultimately it comes down to belief in the dollar, right? And then that dollar will hold on to the stability. And then that may not necessarily be the case anymore, right? So when I decided to hold my money in Bitcoin, I took it in at about a 19,000, 20,000 basis, right? And 2 months later, I more than doubled my salary in 2 months. That's years of labor, years of work, years of commitment, all in 2 months. I've been able to really 3x my salary, and that's incredible. And there's only one product so far in the world that can do that, and that's Bitcoin.
Great. Before delving into that world of Bitcoin, let me first bring in Kayode. Just give me an overview of the blockchain technology industry here in Africa, especially when it comes to its adoption and development.
All right. So in Africa, there has been widespread and adoption of blockchain technology, and much more area of adoption is the financial inclusion part of it, which is the Bitcoin, cryptocurrencies, because that's even one of the first use cases of blockchain, because even though there have been several use cases as well, but the major or the core, the first use case of blockchain is cryptocurrency, and that are really spread across the board here on the continent. There have been several exchanges, even recently Luno just added close to 1 million customers just this January alone. It's 7 million rather, this January alone, and 3 of them are 3 million is for Nigerian population, and same also spread with other use cases, as we saw other exchanges also using cryptocurrencies as exchange. So so far in Africa, basically in adoption, people are using cryptocurrency to be able to leverage on the blockchain here on the continent. And as I mentioned, starting from South Africa, Nigeria, Kenya, those are the main reasons why people are using blockchain, basically cryptocurrency. And people can now extend use case to other areas like health, supply chain, and also real estate, and also agriculture as well.
Great. You spoke about the financial industry as one of the very quick adopters of, the blockchain technology. And I want to bring in Obi. When you look at the nature of blockchain technology, how likely do you think it's going to disrupt either the banking or the entire financial industry, if ever that is going to happen?
Yeah, so I think whether or not it disrupts, I think it's a combination of how well the existing, how well the incumbents like my own bank and other banks around the world adapt and are relevant. I think if you look at what blockchain is, it's an evolution of money. It's changed, since the beginning of human history. Banks hadn't always existed, even though every human society always found a way to store value. Right, and over time, the way we did that evolved. At a point in time, it was cowrie shells in some places. In other places, it was carvings. Eventually, we landed at gold and silver, and then we eventually moved to paper fiat currency, and now we're moving into the digital realm. Right. One of the issues with money has been the ability for the minter to print inordinate amounts in order to finance themselves, right? And this has happened many times throughout history. It usually happens in during war, when you need to produce resources to get forces to fight your enemies, and this would put a strain on the economy, and that strain tends to move things to the next stage. This happened after World War II at the IMF conference, where the US dollar was made to back all the other currencies. And this was because after World War I, the US, which was isolated on the other side, kept all the gold, right? They were producing all the weapons, very, it was for a long time, the US was by far the most prosperous nation in the world. And so they accumulated this wealth, all the gold-backed currencies. If someone buys something from the US in their currency, which was backed by gold, the US eventually makes a call on that and then goes to the country to pick up the gold. So at the end of World War II, right, years had passed, the US had all the golds, all the countries' currencies were no longer backed on the gold standard because they printed a lot of money to fund warfare. And, they were war-ridden, looking to rebuild. They owed each other a lot of money, and the US was the only one left standing. And so the US became the global standard because it was on the gold standard. And less than 30 years later, the US currency left the gold standard because they could not keep up with the demand. Now, if you look at where we are in 2021, we're coming out of, in fact, we're still very much in another huge shock to the global economy, coronavirus. And the US has printed trillions, the world has printed trillions of dollars to keep their economies afloat, right? And what happens when there's too much money in the system? It devalues. So blockchain, crypto, it offers a solution because no one person owns it, so no one can just print money, right? I cannot be a nation and say, all right, so I have dollars, I have francs, I'll just print a bunch so I can fund infrastructural development, and then anyone that holds my currency loses because it devalues. It is resistant to that kind of inflation, right? It's limited. There will only be ever 21 million Bitcoins in the whole world that we all have to share. And every other currency, every other crypto that's released has the same kind of model: 1 billion minimum or maximum, 2 billion maximum, etc. Now, banks, our position, it's complex, but in short, in this day and age, a central bank, the central mint, the central entity that maintains the ledger, right? So who has this amount of money? The bank says, I have this amount, therefore I have this amount, right? Unless you have cash in your house, the number that shows up when you open your bank account application is how much money you have. And the central bank provides the currency, right? That fuels the economy. And then, us commercial banks, where we are part of the node of that large network that helps to distribute and store that money. If you introduce a system that circumvents the central bank, suddenly you ask the question, well, what are banks for, right? I have my money on a flash drive, or I have my money on my cell phone, or on my browser, on my laptop, right? You can have a wallet anywhere. You could have $1 trillion worth of Bitcoin stored on a device smaller than your Apple Watch, right? Now, I think banks, they remain relevant because we have found ways, or we specialize in custodianship of various valuable things. So for fiat currency, we help you store it in our bank, right? You can always access it when you want, just prove that it's you. Many banks around the world have storage lockers. So if you have land titles, precious jewels, you can store it at our bank. And I think the same dynamic will appear in the world of blockchain, right? So right now, you need a private key, a very long password, in order to continue to have access to your blockchain. What happens if you lose that? Once it's lost.
Obinna, let's come back to that conversation, but let me first bring in Russell. Bitcoin, which fits well into the insights that Obinna just shared, has been making a lot of news recently, but there's still a lot of uncertainty around it. For instance, when you look at the level of fluctuation, we've never seen that level of fluctuation with any currency as Bitcoin, right? But why should it become the next store of value? And, why should people have confidence in it?
It's a great question. So I think it's important to realize that Bitcoin enables every African to be their own bank, right? And ultimately, it's all about seeking alternatives which hand you, your family, to have more access and control over your money. So all services, a person who holds Bitcoin can essentially become a financial services company. All right, so let's take remittances, for example, right? Because Bitcoin at this point is not just a speculative asset. Every weekend as a child of Nigerian immigrants, we would go to Western Union or MoneyGram, to send money back home. What Bitcoin does is it allows regular people, to bypass legacy systems which have ultimately traditionally worked against many Africans for many generations. So I'm invested with two companies, one Strike, one Lightning Labs, who is a CTO. One of the CTOs at Lightning Labs is a Nigerian. And in a remittance disruption, right? Most Africans incur about 10% of remittances from year to year, right? And transacting between African countries is just as difficult. But now a person can, even without even understanding Bitcoin, can send their money, right, from the States to Nigeria to Europe to wherever, right, for low nominal fees. That's power back in your hands. You don't have to worry about the fees that you will incur from intermediaries, all those alike. And there are all sorts of new financial options, whether it's collateral. Lending has been something which is much more prevalent, and a new application, towards overall finance, where it's enabling individuals to collateralize their fiat, right? You have interest-bearing products, which people can receive 12, 14% a year on their money. No other asset, no other product can do that, right? So Bitcoin is already touched gold in terms of a $1 trillion store value market. And it's not far-fetched to see it being able to reach, whether it's 100,000, 200,000 in just this year alone. People believe, and the money's showing it. Institutions are holding it in corporate treasury. It's just a matter between when central banks decide to do it. This is a proven asset. Stock to flow model showed that it works and that it makes sense, and it's here to stay.
Russell, if you were to advise how much people should invest, in cryptocurrencies such as Bitcoin, how much would you suggest? Because I've had people like Chamati Parhaptia suggesting 1% of your net worth, others say 10%, but not everyone has that luxury of investing, such percentage of his net worth in Bitcoin. What is the best way to go about it?
Right. So I think Bitcoin unfairly gets caught up in unit bias, meaning that most people don't understand that they can buy or parse a Bitcoin for themselves. So I mean, if you were to invest $1 into Bitcoin 11 years ago, that $1 would be worth about $62 million right now, which is absolutely incredible, right? So I talk to people about dollar cost averaging, just putting a little bit in from week to week, whether it's $50, $100, right? I mean, we're looking at an asset that if you zoom out, goes up 200x per year. And hey, I'm not a financial advisor. I'm not a money manager. I don't do any of those things. But what I can say is I've outperformed every single entity which has come and solicited me for my money, right? Bitcoin does that. Not a person, not a banker. Bitcoin as an asset has been able to prove that much value for me. And that is available for everyone all over the world, right? As long as you have the internet, you can be a part of this global economy.
Let me bring in Kayode. When you look at Bitcoin and other cryptos, they have faced a lot of regulatory scrutiny in so many African countries and resistance. But when you look at some of the countries like Kenya or even Nigeria and Ghana, authorities have been a little bit open about it. And I think a case in point is Aircoin, which was launched in Kenya last year. Why do you think these cryptos and Bitcoin in particular still face a lot of resistance from governments?
I will also first bring about the recent ban at the Central Bank of Nigeria, the recent ban in Nigeria, which has really caused a lot of uproar because after the US, Nigeria is one of the top destinations for Bitcoin traders. And people have been trying to get their ends made through trading cryptocurrencies. And before Bitcoin or when Bitcoin was existing, is that each country has its own regulation when it comes to money. And the central bank always wants to make sure they have the authority. And central bank also work directly with government as well. And you're trying to make sure that they regulate what it is has to do with fiat or payment of money across board in the country. And recently, before that time of ban by the government of Nigeria through the CBN, was that I think there was already a meeting with the stakeholders to try to understand what is Bitcoin, what is blockchain, and how they can regulate it. And before that time as well, the Nigerian government agency, NIDA, has already looking out and how the government will be getting over $10 billion blocking for the next 10 years. So many the governments actually understand and they want to actually see how they can get on board blockchain. Same with SEC of Nigeria. But we were very surprised to see the central bank trying to come up with this ban here in Nigeria. So that's the first point when it comes to regulation in Nigeria or in Africa. I feel to some extent the Nigerian government really are trying to understand how best to regulate it, but the ban is not really welcome. I mean, in general notes to really on innovation. And recently, the Bank of Ghana just, as against what happened to Nigeria, just accepted the sandbox of blockchain through one of our friends, MTech, Kamali Cadet. I mean, which was very interesting. I mean, and that look very interesting to have our government already looking to support blockchain technology in that context. And I will not be surprised moving forward if the exchanges of blockchain project moving down to Ghana to buy and establish, because meaning that there's a green light. Eventually, once the sandbox become more successful, there'll be more blockchain firms actually trolling down to Ghana to find established, meaning that it's a good regulatory environment for them. And also, as well in Ghana, in Kenya, as I mentioned about Akon. Akon just completed the pilot stage of his wallet, collaborating to see how they can use for payment in Kenya. And it was done through using for payment in restaurants and also in hospitals, and that has worked perfectly well. And that to support that was when the Kenyan government is looking how they can tax cryptocurrency payment in the country, and also much more developed regulation in South Africa, where the federal government is already looking at how to support and how to bring in blockchain regulation, cryptocurrency regulation in the country. So far in Africa, I mean, it was neither here or there. I mean, up back and forth. Some countries are actually supporting this regulation, while some countries are actually against this immigration. And I'll give an example of some of this country. And even go as far as northern part of Africa, like Egypt or Morocco, I mean, those guys are totally banned the use of cryptocurrency. And while Indonesia also, they are looking to central bank digital currency as well. So the regulatory environment is very lukewarm, but what we advise in terms of opinion to the central bank and also the government of this country to see how they can have a sit down with stakeholders and understand what they are doing with it and how they can even support this innovation, because everybody stand benefit to gain on cryptocurrency, as Ross has mentioned. So be it the government, be it individuals, be it businesses, be it media houses, we all have a benefit to gain on this cryptocurrency, and the regulatory environment should be fair enough to allow innovation to thrive, and we will be benefit from this innovation. Thank you.
Kayode, I want, before we leave this, we tend to limit the conversation on cryptos, but there's so much more with blockchain, and I know your institution does a lot of work around that. Tell me how likely that blockchain technology is going to disrupt industries such as logistics, pharmaceutical industry, mining, and education.
Yeah, so just like every technology, technology evolves and there's development that come on board. Even aside from technology, there's artificial intelligence, there's machine learning, there are several. But much more important is all these things also has to do with data. And data is very important, especially in these days of pandemic where everybody's going online to get their businesses done. This data, whether being transactional or being undocumented organization, need to be well secure. So, and where can it secure if not on the blockchain? And even most present part is right now is that you can even go ahead and create your own private blockchain to store this data. So, the future of blockchain is very, very bright. I mean, in terms of data securing the data resources, I mean, to make sure that it's not tampered and nobody else is trying to use your data or steal your data for something else. And much more is now that the African Union is looking about the centralized payment for the continent to make sure to ease trade on the continent, and to make that also much more stronger on the continent. Use of blockchain and also coming up with the cryptocurrency for easy transaction and trade on the continent. And as an institution, we're actually supporting startups and also individuals that are trying to see how they can come on board on the blockchain. More recently, right now, we are even initially working with students across the continent with our campus blockchain hackathon. That started with, in January, and we are so pleased to have the support from the government of Rwanda, through the Ministry of ICT and the Rwanda Information Society Authority, to support us to work with students across the continent to see how they can come up with their new ideas. And we are very surprised to welcome as many ideas from the students. They are working on digital identity, some are working on financial.
Kayode, I'll come back to you later. I want to bring in Obinna. There's something special about blockchain, which either you talk about the decentralization of its nature, whether you talk about the fact that it is immutable and the kind of transparency that comes with it. How comes that so many governments and so many financial institutions don't see this, especially in Africa right now?
Yeah, you're right. I think it's counterintuitive, technology that exists outside of all traditional known systems, right? And there's no governance, there's no one person in charge, so how can that be transparent? Well, the key to the transparency lies in the blockchain itself. I mean, the blockchain is, like Kayode said, like Russell said, it's a ledger. Every transaction that takes place is on that ledger. And every person that has Bitcoin has a piece of that ledger. So if you were able to read what was on the ledger, you would see that, oh, I sent money to Russell. Russell sent money to Coyote. It's all there for everyone to see. Now, our names won't be there, but our Bitcoin addresses will be, or our Ethereum addresses. There are many, many, many thousands of cryptocurrencies out there outside of Bitcoin, and so you can very simply trace. The audit is automatic. It's built into the technology itself. Now, the reason why I think governments have an issue is because it is something that you cannot control by its very nature. But even that notion, I think, is a bit wrong. There's something that I believe. I believe that blockchain and cryptocurrency, it abhors bad governance. The most valuable currency is trust. And this is what makes Bitcoin so valuable, because they've built it such that you kind of achieve the zenith of trust because everything is open. There's no need for trust if you have all the information, and that's what blockchain helps us achieve. Now, a government, I think we're
out of time. I'm sorry we're out of time, but I want to give 30 seconds to Russell before we wrap up. Just tell me, where will investors like yourself be looking at?
Well, Bitcoin is king, right? There's nothing better. And ultimately, I think the focus should stop being on how to control it, right? And Africans need to ask themselves, how do we engage it? Whether that's mining facilities, Bitcoin-friendly legislation, businesses and corporations. You're going to draw businesses and corporations to come to Africa, right? So I think ultimately it's important to take a stance where nations stop trying to protect themselves from this threat with anti-crypto type regulation and hard policy towards banks and businesses, right? Which is, ultimately all understandable, and show that, hey, we're truly open for business with one of the best and biggest financial products the world has ever seen, right? So I don't think this is something that we should be as African countries prohibitive with, but ultimately look at legislation from all over the world, Belarus, Singapore. And my advice would be to take advantage point in which you look at the taxation and with mining, trading, and all those other things, and the gifts, Bitcoin gifts, inheritances, and offer really low taxes, if any. So Bitcoin will always remain king. It's built on brand. It's built on ability.
Well,
go ahead.
That was Obinna Ukwani, the Chief Digital Officer at the Bank of Kigali. Russell Okungo, American football star. Mind you, Okungo is a Bitcoin enthusiast as well, and an entrepreneur. And then Kayode Babalinde, the Executive Director of Africa Blockchain Institute. That's all we had for today's episode. See you next time. You are with me, Julius Bismungu.